All right, everyone. Welcome today to today's topic. So, class is officially in session. And what are we going to talk about today? We're going to talk about saving money. Now, why is this important? For the obvious reasons, but I'm going to look at it another way. If you want to earn a dollar, you got to go out there, jump in your car, spend gas, spend time arguing with people, people cutting you off, honking the horn, spill your coffee on you. Did I just make that scene look horrible and stressful? Good. Because the whole point is if you can save a dollar, then you don't have to go out and earn a dollar. So saving a dollar is just as important as earning a dollar. Now, how are we going to save money? Simple. We're just going to get money over here and put it over there. That's all we're doing. Sounds simple. I know it's crazy, but I'm going to show you some numbers to back this up. Now, all we're doing is looking for a credit card where you can do an introductory rate transfer. Sometimes it's the same company. Say you're with Capital One, and they say you want to go ahead and transfer your other balance on other credit cards you have. You want to transfer that balance over here. If you say yes and the number is right, you're going to see how these things add up in a hurry, and it starts saving you a couple of dollars. So let's look at this is a typical, let's say $5,000 and 22% interest rate is that we're paying on that credit card. You're paying $150 a month. It's going to take you 52 months, and you're going to pay 27.98 in interest, right? You probably don't think about it. You just make those payments every month, and everything's fine. But now let's include a credit transfer and see how everything changes magically. Typically, when you do a credit transfer, we're talking about the initial 12 months, there's no interest on that. Now, think about that because interest is basically what sucks up all your money when you're making payments on a car loan, mortgage, or even credit cards. Think about it. For every dollar, 22 cents is being paid towards the interest in this scenario. But let's say I transfer the full $5,000 and I'm not paying interest, but I am paying $150 every month, right? What do you have at the end of the month? Well, at the end of the month, you've already paid, or at the end of the year, I'm sorry. If I have a $5,000 balance at the end of the year, I've paid off $1,800, all towards the principal because there is no interest rate. Now, think about it. Now, starting on the 13th month is when you're paying interest on this 3,200, not the 5,000. That makes a difference. How big of a difference? Simple enough. You're going to cut down in half almost in 28 months. You're going to pay off that $5,000 balance. And interest? Well, you're only going to pay $896 because remember, every month that you're paying towards the principal. But now that you got rid of a big chunk of the principal, in this case, $1,800, well, you're going to be paying it down even faster. So that little trick right there will cut off, 52 months was the original. Now you're down to 28. Think about how fast you can get the ball rolling with this. And all you did was get the money here and put it over there. That's it. That's how you save money with a credit card balance transfer. Now, it is possible that this even improves your credit score. Now, I'm going to tell you a real quick trick about credit scores and how to get your a couple of points up. But this is mine. I did receive this email from Credit Karma saying I had a 60-point increase. Why? Because I went down to here, the magical number of 30%. We'll call it the 30% rule. So what does that mean? Clients all the time say, I've been paying my credit cards. I don't understand. Why is my credit score so low? Because it's not about just paying on time. There's a mathematical formula. It's a big secret. They're not going to tell us industry secrets, but we can't figure some stuff out. And one is the 30% key. Now, basically, let's say you have a $10,000 line of credit, and every month you're at $3,000 or below. That's 30%. If you're at that 30%, the alarm bells are ringing, the credit reporting system loves you, and you can continue to get, better credit, better interest rates, better everything, which saves you money. But I'm going to show you a quick, easy way to also increase your credit score. And it's not necessarily based on a credit utilization ratio, but it's based on one of the flaws of the credit reporting system. So congratulations in this example. You just bought your new home and you have $100,000 that you put as a down payment. Your credit score should be through the roof, right? No, because the only thing that the credit reporting bureau knows is that you owe $200,000 as of today. That's all they know. They don't know about the $100,000. They don't look at your tax returns. They don't look at your assets. They don't look at any of the stuff. That's all they know. So now let's look at this at another way. Next month, you owe $199,000, right? You paid down 1,000 in the principal. Well, good. Your credit score just went up a couple of points. That's all. That's all it did. Because at the end of the day, this isn't 30%, is it? We're way off 30%. We're at 99% of the original balance of what you owe is still there right before them. They don't know about the $100,000. They don't know that maybe you took out another $50,000 and redid the kitchen. The credit reporting system doesn't know that. It's based on a mathematical formula looking at your debt, not at your assets. So, how do I improve my credit score with this? Well, I'm going to tell you something that I've always done. And I did it about, when did I buy my truck? About a year and a half ago, about a Ford F-250. And they wanted $20,000 down, right? Again, let's make up some numbers here. Let's say the truck is 50,000 and I give them the 20, right? The only thing the bureau knows is I owe 30K. That's all I know. And next month I owe, 2,980 because the principal is getting paid down very slowly because of the interest rate. So how can I buy my truck and improve my credit score? Well, I convinced the lender to say, no, I'm only going to give you $10,000 down. I still kept the $10,000. What did I do with it? Did I go take a cruise and have fun? I was down in Miami, went to South Beach? No, none of that stuff. I just used the same $10,000 to pay down the loan. That's all I did. It's still the same at the end of the day. The only difference is how I made those payments. So think about it. If I put down the 20,000, then the bank only knows that I owe 30,000. But what if I put down only 10,000? Well, the bank is saying, well, you owe $40,000. That's all we know. Again, remember, they don't understand anything about what's going on behind closed doors. But if I start adding an extra $1,000 a month for the next 10 months and get that debt down to 30 grand, the alarms are ringing again. The credit bureau system, your point system is going out of whack, is only going straight up. That's all they know. I didn't do anything different. I just didn't give them the 20,000 today. I gave them 10,000 today and 10,000 tomorrow, literally over the next 10 months. That's all I did to boost up my credit score. So think about it. If you're going to be in a position where you're going to go buy a new car and you obviously you want a good interest rate, right? We're talking 5, 6, 7 years on these payments. You got to learn about the credit utilization ratio and get up that 60 points. Again, they don't care that you've always been paying on time. That is one factor of many that they look at in order to figure this stuff out. But if you're down to less than 30%, your credit score is going to go up 60 points. I should have applied for a loan now just to see what the difference is between a 60 point. It doesn't even matter if you had 760. Let's say I'm 760 today. If I was at 700 yesterday, just think about the enormity of that, how much money I'm going to save under interest alone. So that's how you save money. You should have a credit utilization ratio at 30% or below, if possible, because once you apply for credit, you're going to get a better interest rate. A better interest rate is going to save you money. And you saw there how the interest rate, just by doing a balance transfer of only $5,000, you see what it accomplished there, how much money I'm saving, where I paid everything off in 28 months and I only paid $896, I think it was, in interest versus 2,798. But you save money. That money you left over, go do whatever you want with it. Go take a cruise, go put it in your IRA to save for a rainy day. But that's how you save money. Now, like always, there's going to be issues and pitfalls. And I think the most important one we got to worry about is what's the interest rate on the new credit card? If it's more or less the same, then you're good, right? You did pay off this already. But, let's say you were at 21%, now you went to 25, 26%, whatever. We now have to worry about this. You're going to have to sit there and do the math again. We don't have to do math. Remember, I'm not a math guy, but we do have, you can go online and just type up, interest rate calculator or something like that, and you'll be able to do the math simply like I did there with those screenshots. But here's the part that really worries me the most: maxing out the original credit card. Let's say with credit card A, you transferred your balance, right, of the original 5K. So now you owe 5K over here. What happens with this credit card? If you kept it open and for whatever reason you start using it again, and let's say you go up another 5K, well, now you see the problem. You've doubled the amount of debt that you have. So that's the concern, and that's the pitfall. You can either get that credit card, throw it away, burn it, throw it in the fire pit, do whatever you want. But if you use it and you just transfer the balance to a new card of 5,000, and now you have 5,000 over here that's empty on that credit card, and you use it up again, now you owe 10,000, and then that's where we're going to have some issues. So preferably you don't use the account. Here's another trick. Remember the credit utilization ratio. Since you have zero on that credit card, right? That's only going to boost up your score. But I tell you what, if you close that account out, then there's no balance. There's nothing for the credit reporting system to look at. So that's not going to help you. People always think, well, I'm just going to pay off the balance and close the card, and that'll help me. Not necessarily. You're better off having that card open and maybe use it for something minor every month just to keep it active, and then just pay it off, whatever, gas, anything you can think like that you can think of. But if not, you see the problems again, the little games of the credit utilization ratio. You're better off keeping that card open and somewhat active, because if you close it, then you're going to have a problem. But now you see also the catch. You cannot use the card and get and double the amount of debt that you have. All right? Got it? So if you have any questions on this, feel free to contact me. I have a new post that was up regarding, coincidentally, golf. I've done a post on that previously, but a golfer reached out to me, and I published that article on Sunday on the readers question forum. You could always reach out to me, right? Send me an email. Any questions you might have, whether it's a credit utilization ratio or anything else, reach out to me, and I'll post my response in the readers question forum. All right. For students who are using my textbook, as always, I always keep saying, remember, try to go outside the four corners. Try to use other materials to understand this. And this is a perfect example: the videos, the blog posts, and the podcasts that keep coming out regarding all these issues. But likewise, if the university you're at, they're using my textbook and you have any questions, feel free to email me. And again, I'll put that in the readers forum. All right. So I'm almost done, everybody. The only thing remains pending is you can always find me on X or Twitter, and you can find me on Facebook as well. My Facebook page. If you want to reach out to me, give me a shout out. Tell me how you're saving money and how much you're gonna have a good time with all the money you're saving. All right, everyone. Take care. Have a good rest of your week, and I'll continue posting those blog posts for you. Take care.